down payment and house prices are up again in May 2023. Hey everyone, Joe Bladek here, live for Canadian Mortgage Weekly, episode 143. And on today's episode, really excited. I'm streaming live on Facebook, YouTube, TikTok, LinkedIn, Twitter, all the different profiles, and looking forward just to get this information out to you guys today. Today, specifically, where to find a down payment. So, with that, we're going to get started right away with that because finding a down payment is something that a lot of my clients have a hard time with, especially if you're just getting into the market. If you're just getting into the market, uh, buying a home these days, the average house price right now is $729,000. Can you believe that? $729,000. So what's the down payment on $729,000? I mean, what's 20% down on that? 20% down, $145,800. Does anyone have just that much money sitting in their bank account these days? Probably not. I mean, you can get in with minimum down payment. How much is the minimum down payment on $729,000, which is the average house price right now in Canada? Can you believe that the house price in Canada has gone up 5.1% in Canada month over month from April to May 2023? I can't believe that either. 729,000 average house price, down payment would be $47,900. I mean, where are you going to find that amount of money? I know that finding a down payment these days is quite hard because who has that saved up? But I'll tell you what a lot of my clients are doing these days and how they are getting down payments set up for their purchases because people are still able to do it. And what I'll do today is I'll cover off not only where most of my clients are getting their down payment from, but I'll also cover off some programs available that are available through Canada, specifically in Ontario, on how to get down payment, either from a source that is not family, because that's one of the main reasons. That's one of the main things I'll talk about today. But there's other sources we can get a down payment from that a lot of people don't know about. And there's a lot of programs out there that actually will give you a down payment. So I'll get into that just shortly. But first things first. Average house price in Canada is up 5.1%, bringing the minimum down payment to $47,900. You can still get a house cheaper than that. It's harder to find. However, a lot of houses in Canada qualify for these programs. So I'll get into that. But the main way a lot of my clients today are getting their down payment is through the Bank of Mom and Dad. I know you don't want to hear it. I know you don't want to hear it, but the Bank of Mom and Dad. And as of this month, the average size gifted down payment, I'm not talking about the max, but I'm talking about the average size gifted down payment that I'm seeing from family is 300,000. 300,000. And why is it that much? Well, it's that much because that's how much is needed to get into the Canadian housing market and buy a reasonable home for your family these days. And that's what I'm seeing buyers need in order to afford the mortgage on the other end, because your down payment plus your mortgage is what you need for your home purchase, right? Those two add up to make what you can afford in terms of your housing price. So if you have a $300,000 down payment and you can afford a $300,000 mortgage, then you're buying a $600,000 house. If you have a $400,000 down payment and a $400,000 mortgage, you have a $800,000 house. Pretty simple, right? So most people in Canada, specifically Ontario, are actually getting their down payments from the Bank of Mom and Dad, believe it or not. And a lot of people would ask, where are these people getting? Where where's the bank mom and dad getting their down payment? I mean, my parents don't have $300,000 sitting in their bank account, let alone $50,000, let alone $1,000 sitting in their bank account. How is that even possible? Well, what parents are doing is they're taking out a mortgage or a line of credit on their own home to be able to get into the market, to be able to get their kids into the market because they want to set their kids up. And so these parents, they have a free and clear home. They bought in years ago, back when it was so hard to get in the market, right? I mean, our parents are buying homes that were priced around $50,000, $100,000 in the 70s and 80s. It wasn't that difficult in comparison today. Houses cost 10 times as much as what they did when our parents were getting in the market in the 70s and 80s. So with that, they have this large amount of equity in their home. And what they're doing is they're setting up either a home equity line of credit or a mortgage. And because they've been in the house for so long and because of their age, they're able to qualify for different types of mortgages. Even if they've retired and left work and don't have an income, they're able to qualify for a different kind of mortgage, enabling them to take that equity out and give it to their kids for that down payment. And again, as I mentioned, the average national house price in Canada has gone up 5.1% from April to May of 2023 to $729,000, making the minimum down payment that someone would need to get into the market $47,900. And if you're getting into the market with that size of down payment on the average national house price, $729,000, it still makes you have to qualify for a mortgage that's close to $700,000. So that's really difficult right now because a lot of first-time home buyers, they don't have jobs that are paying them each $100,000 to make up a family income of $200,000. You know, that's pretty much what's needed to get into the housing market these days, is an income of $200,000. It's such a huge amount of money. I cannot even believe it. It's so much money. So if you have anyone that could possibly benefit from this information, I'm going to ask if you can share this information and like and comment and maybe tag some people. But the main thing is that Bank of Mom and Dad is the number one source in Canada of people's down payments. And what they'll do is they'll come to me and they'll find the house, and they'll also have the parents connect with me. I'll do the mortgage on the parents' house. We'll get the money for the down payment, and then we'll do the mortgage for the kids, the first-time buyers, and then everyone's happy. Parents got their kids out of the house, and the kids have their own home that they're paying for, and they don't have to pay rent anymore, and essentially throw money out the window. So what's another way that folks are getting their down payment? Well, I do see some people that are living with mom and dad rent-free into their 30s right now. And what they're doing is they have full-time jobs and they're banking all that money. They're not spending a penny of it. They're not going out. They're not buying Starbucks. They're not buying new cars. A lot of these folks that are getting to the market right now, they come to me. They're driving a 15-year-old car. They have money saved up because they haven't been buying Starbucks and enjoying life in that sort of sense. And they've saved up every $5 here, $10 here, and they are coming to me with that $50,000. It's very hard to save up $50,000 with the way things are priced these days. Rent is so high. Food costs are so high. So mom and dad, instead of helping them with the down payment, they're just helping them by allowing them to stay in home for an extra 10, sometimes 15 years. I'm seeing people in their 30s buying houses and still living with their parents. Even if they are with a partner, the partner and them live in their parents' house, sometimes in the basement. for into their 30s before they are able to buy a home. I know it's not really an ideal situation for anybody. However, that's another way people are saving up that minimum down payment, which on an average national house price house is 729,000 is $47,900. That's the down payment required for the average national home price. So saving by living with mom and dad would be the second most popular way people are finding their down payment. Now, let's talk about the programs that are available, because there are some programs available to give you your down payment. There are programs available that will give you, say, $50,000 to buy a home. And you're probably wondering, what's the catch with these programs? How can they give me $50,000 and not ask for it back? Well, the caveat in this case is you have to live in that house for 20 years. So if you're looking to move anywhere and you're okay with living there for 20 years, there are programs available through municipalities in Ontario, Canada, that will give you your down payment. And I've done a few of these actually in my career of 13 years, a number of these actually. And you got to make under a certain amount. You can't buy a lavish home. You have to buy sort of the lowest priced home, but you're getting into the market and you don't have to have your down payment saved up. Let me give you an example, okay? If does anyone here know where Barrie, Ontario is? Barrie, Ontario, just north of Toronto, about 45 minutes north of Toronto. They're part of Simcoe County, okay? And Simcoe County has what's called a down payment assistance program, okay? And their down payment assistance program provides a down payment up to a maximum of $50,000 for those who apply. And that $50,000 is a forgivable loan that essentially gets erased after 15 years of home ownership. So in this case, you don't have to live in the home for 20 years. You can live in the home for 15 years and still qualify for this down payment assistance program to give you $50,000 towards the down payment of your home. So there's programs like this all across Ontario. Simcoe County is one of them. Lanark County, that's one in Ottawa. There's Oxford County, which is close to London, Ontario. I have a list of these programs available in my office here. If you're looking to buy a home in Canada, specifically Ontario, I can help you get set up with one of these down payment assistance programs where they actually give you up to $50,000 for buying a home. I've had people essentially come to me and they don't have a down payment at all. They just have a few $1,000s for legal fees and land and closing costs, like land transfer taxes. And they apply for this program, they get accepted, and they buy a home. And that's all they buy a home with is just that few $1,000s, because they've taken this down payment from the county and used it to buy a home. And they are able to get into that home. And they're telling me, you know what, Joe? I would have not been able to afford a home without this program. And that's okay if I have to live in that house for 15 years to have that loan, that forgivable loan erased from my record, because I have this home and I'm not paying rent. And during that time, you're actually paying down a mortgage. All right. So what happens if you end up selling your home before the 15 years is up and you've taken one of these down payment assistance programs from the county? Well, your down payment that they gave you is actually prorated in terms of you say they give you $50,000 and the house price goes up, then they share in the appreciation with you. And if your house price goes down, then they don't ask for any extra money back, which is pretty good. Okay, I'm getting a comment here about how don't buy a home in Canada. It's the most overpriced in the world. yes, we are overpriced. Not overpriced, but we are high priced in Canada. However, there are a lot of factors that have made it like that. Low interest rates have been one of them. And another thing has been that immigration is fueling this considerably. We had 1 million people immigrate to Canada this year, which has really added a lot of demand to the housing stock. Also, people don't want to move right now because interest rates are high and they don't want to give up their low interest rate, which is putting a lot of pressure on the current stock. And we're seeing house prices continue to rise. So if you don't want to buy a home in Canada, that's fine. But there's a lot of indications to say that they will continue to rise in price because immigration is set to be still high in 2024, 500,000 people, high in 2025, another 500,000 people. Where do those people go? Well, housing starts have been on a decline every year, and housing starts is how many houses are being built every year, how many units are being built. And there's just not enough being built every year to keep up with the additional people that are coming into our country. So if you're thinking, oh, I'm not going to buy a house in Canada, it's way too overpriced, well, that's okay. You're going to be a renter and you won't be able to buy later because it's just going to be even more pricey down the road. So for those of you that do want to get into the market, there are homes available that would fit within this down payment assistance program where they give you $50,000 to buy a home. I'm just going to continue reading about this program for you guys here. So you have to, one of the counties I was mentioning that has this down payment assistance program is Barrie, Ontario. So Barrie, it's 45 minutes north of Toronto. They have a maximum house price eligibility criteria. So that's $593,879. I had mentioned that the average house price in Canada is $729,000. However, there are many homes in Barrie, Ontario, along with Simcoe County, that are priced below $593,879. Many homes like that, actually. And what you can do is apply for this program. The county will give you $50,000 towards the new the home you're buying. And one of the caveats to this program is you have to have a household income that is under $103,200. So that's also another caveat in Canada, specifically this program, to be able to buy a home and have the down payment provided to you by the municipality. So just getting into the top 3 ways that people find down payments in Canada, that would be the bank of mom and dad. As I mentioned, the average amount that is gifted from the bank of mom and dad these days is $300,000. And the second most popular way is clients are just living with their parents for a long time, into their mid-30s, some of them, and they're buying a home at that point. And number 3 is they are applying for these county down payment assistance programs, which a lot of people don't know about, but I've done a number of them now for my clients, where the county will give you $50,000 to buy a home and live there, and you don't have to pay the money back ever if you live there for their minimum amount of time. In this case, for Barrie, Ontario, which is one of the major cities in Ontario, it's 15 years. So if you live there for 15 years, they're looking at providing down payment. So what they want to do is a lot of counties in Ontario are doing this specifically to grow the area. For example, Toronto is not doing this at all. Toronto is already growing like crazy. So places like Barrie, Ontario, they are doing that. And with the average national house price having gone up by 5.1% in Canada in May of 2023, it just shows you how robust the housing market is. As a matter of fact, house prices went up in February of 2023 by 8%, in March of 2023 by 4%, in April of 2023 by another 4%, and then in May of 2023 by 5.1%. And that's year over year growth, right? we did see housing prices come down about 30% from the peak of 2022 in February. But since then, this is how they've been rebounding. So huge growth so far for the first 5 months of the year, from February to May specifically. And with that, it's just making it even harder for home buyers to get in, especially first-time buyers, because it's so hard to qualify now with the interest rates as to where they are at. Okay. And what else is happening in Canada as we talk about mortgages and the data that I'm seeing? Well, in the inflation markets, we have seen Canadian inflation go up to 4.4% in April. That was up from 4.3% in March, but down from the peak of 8.1% in June of 2022. So we are down quite a bit from the peak inflation, but still inflation runs hot, very high in Canada. And the governor, the finance minister actually in Canada, 𝗪𝗂𝗏, is on a mission to bring inflation back to 2%. My family and I went down to the Bank of Canada Museum a few months ago in Ottawa, and there's actually a really cool video game you can play at the Bank of Canada Museum. My son and daughter loved it. It's a video game all about trying to get inflation back to 2%. It's so funny. You can actually get on this video game. You're playing. You're in an airplane, and you have to hit the 2% marks, and you're going all over the place. And now, whenever I ask my kids about inflation, they say, "Dad, we need inflation to be around 2%." So even my kids that are still in elementary school know about inflation and how it needs to be at 2%. Really cool stuff. So inflation right now is sitting at 4.4%, and we just had an interest rate increase on June the 7th of 2023 by 0.25%, bringing prime rate up to 6.95%. Can you believe that, everyone? The prime rate for AAA clients in Canada right now is 6.95%. That makes qualifying extremely difficult because we have the stress test on top of that. So not only do we need to qualify for the 6.95% in Canada right now, but we need to qualify for more than that because of the stress test. And the stress test is a 2% increase. So when you're looking at qualifying for the stress test, you're looking at qualifying for a rate of 8.95%. It's quite crazy, actually, because not many people can qualify for very much with a stress test rate at 8.95%. So with that, prime rate could possibly even go up on July the 12th again, because with the June 7th announcement, it's aimed to bring inflation down. However, we have not seen the data for inflation for May. And the Bank of Canada was making this rate increase based on inflation data in April of the increase. But we won't have the data for June, which is the month that will be affected by the rate increase, until after July the 12th, when the Bank of Canada has already met. And May's data will not be affected by the June 7th rate increase, because obviously the rate increase happened post-May. So what will happen is, if inflation does go up in May, which could possibly happen, it will not have had any impact from that rate increase in June, and Bank of Canada will be forced to consider a rate increase in July again. And they raised rates by 0.25% in June, and we could probably see another 0.25 increase in July. And that would bring prime rate to 7.2%, which would mean the stress test rate would be 9.2%. I can't even believe I'm saying that. 9.2% would be the rate that everyone has to qualify for to get a mortgage, even though that's not the rate you're getting. That's the stress test qualification rate. So we won't even see inflation data reflect any of these rate increases until we see June's numbers, which will be out in mid to late July, and then we probably will see inflation numbers come down because of the increase in prime rate. Okay, so what's happening with the CDOR rate, and why is that important? Well, the CDOR rate is the interest rate metric that bankers use to price their variable rates on. It's currently sitting at 5.27%. It's been sitting steady for about a week since the rate increase, and before that, it was sitting steady at around 5.04% since the beginning of January. So we have an increase there by about a quarter point, just shy of a quarter point, which matches that Bank of Canada rate increase. And essentially, if you want to see if a variable is a competitive option for you, this is the metric I use to see if a variable rate is competitive. And right now, it is not as competitive as it was 2 years ago. Tell you that. And variable rates still make sense for some people, but not everyone. So if you're looking at locking in or taking a variable, or even if you have a variable rate mortgage and don't know what to do, I recommend you giving me a call. Even if you have a fixed rate and you don't know what to do, you want to save some money, recommend giving me a call. We can look at your mortgage. We have folks switching into different types of mortgages. It's free to switch your mortgage to a different lender because the lender usually wants your business. If you're just moving your mortgage balance over to a new lender, the lender typically wants your business, and they usually pay for all the costs involved with the switch. So what else is going on? Well, we have good news in terms of indicators that will show us that rates could stop rising in the near future to maybe months down the road, possibly even to go down. And one of those good news aspects is that the unemployment rate in Canada has gone up. Unemployment rate has gone up to 5.2%. That is actually huge good news for any homeowners and homeowners to be. And why do you want to see unemployment go up? Unemployment went up by 34,800 applications in April. And why is that a good thing? Well, if unemployment continues to rise, the Bank of Canada will be forced to decrease interest rates because they don't want to see unemployment rise. So that would be a good thing for anyone that is looking to get into the housing market, to see unemployment rise. Obviously not great if you're the one that is losing your job because of that. So we don't want to encourage unemployment for those folks that want to get into the market. However, with unemployment on the rise, that could actually be a good thing for interest rates and potential homeowners. So unemployment is up. What's the bond yield doing? Well, the bond yield's currently sitting at 3.69% as of today, which is June 15th. And the 5-year bond yield is what the banks use to price their 5-year fixed rate products. And the 5-year bond yield just last month actually was sitting at 2.7%. So when we saw the bond yield dip down to 2.7, 2.8%, a lot of folks did apply for pre-approvals during that time. And with the bond yield having gone up almost 100 basis points now, we're seeing pre-approvals come in a lot higher. So if you didn't apply for a pre-approval in May, I would say at this point you've missed the boat and you're going to have to be okay with the higher interest rates. It's just the way it is at the moment, unfortunately. All right, so 5-year bond yield is up, causing fixed rates to go up. CDOR rate is up. Unemployment, it's also up. Inflation data for Canada should be out next week. Inflation data for the United States actually is showing that inflation is slowing. It's gone down from 4.9% to 4% in May. So a 0.9% decrease in inflation in the United States, which is huge news. It's good to hear that. Just going to adjust the microphone here. Ooh, that doesn't sound good. There we go. So inflation down in the United States from 5.9% to 4% in the United States, which is showing that inflation can come down. And right now, American inflation has been traditionally a little higher than Canadian inflation over the last few months. But this is the first time, actually, that American inflation has gone below Canadian inflation. So good news there. And I hope that spreads across the border. And obviously, the national average house price sitting currently at $729,000, up 5.1% in May of 2023, up 4% in April, up 4% in March, and up 8% in February. So if you bought a house in January of 2023, you have made out really well. Really, really well, because buying in January of 2023, you would have been able to experience 8% growth in February, 4% growth in March, 4% in April, and 5.1% in May. And that's year over year. So good for you if you bought in January. If you're still looking at buying, there's a lot of indications that immigration is planned to continue in Canada, putting a lot more demand on housing into the future. And there's a lot of indications that affordability will not get any better anytime soon, which means that anyone trying to get into the market, if it's hard now, it's just going to be that much harder in the future. And just to conclude today's episode, because I want to just go over the ways that people can find their down payment, excuse me, is that there's three main ways that I see a lot of clients of mine coming to me and how they have found down payment. And the first major one is the bank of mom and dad. As I mentioned, the average amount in Canada that mom and dad are gifting to their kids is $300,000. That's not the most. That's the average. That's not the minimum. That's the average. And where are they getting this money? Because I know a lot of parents don't have even 10 grand or even $1,000 sitting in their bank account. They're actually coming to me. They're having me put a mortgage on mom and dad's home. And then that mortgage for mom and dad's homes, the money goes to the kids. And the kids use that money for their home as a down payment. And then the kid gets a mortgage on their home. So it's good. It's a win-win for the parents because usually the kids are living with the parents until this point. So the parents are able to get the kids out of the house and get into their own home. And the kids are able to get into their own home as well, start paying down a mortgage. So that's how a lot of people are getting their down payment, is the bank of mom and dad. Second way is I'm seeing those who don't have parents that have equity in their home. They're living with parents rent-free, and they're eating parents' food, and they're banking all the money. They're banking all the money going forward, not spending money on Starbucks. They're driving a 15-year-old car, and that's how they're getting to the housing market, because they're not taking on any debt, saving every penny, and not taking on any car loans. It's funny. It's those folks that have those brand new cars that are not able to get into the market these days, but they have their brand new cars. So that's good. And the third way, just to close off the episode, that people are getting into the market is that they're applying for down payment assistance through the municipality. And there's some programs available. For example, I mentioned the program in Barrie, Ontario. They'll give you $50,000 towards a home in Barrie, a maximum of $50,000. And if you live in that home for 15 years, you don't have to pay that money back. So huge news there. People are doing those three things to get into the housing market these days. And if you have any questions, I would encourage you to contact me. My name is Joe Bladek. I am a mortgage broker with 13 years experience. I've been in the industry for quite a long time, seen a lot of things. Rates been as high as they are now versus as low as they were back for 1.4, 1.5% back in the day. And with that, those are the top three ways people are finding their down payment in Canada. And if you have any questions, please give me a shout. Would love to speak with you about your mortgage. I'm licensed to work all across Ontario and look forward to helping you set up your mortgage or answer any mortgage questions that you may have. And I hope you have a great day. And we'll talk to you soon. Thanks for everyone following me on YouTube, Twitter, TikTok. We do stream live on TikTok, LinkedIn. Hi, everyone, LinkedIn. And this week also, I celebrated 1,000 followers on TikTok. So if you are interested in following me, I definitely recommend it. Hit that plus sign or heart sign or whatever platform you're on. And I look forward to releasing videos that can help you with your mortgage process. I usually release one video a day. And my podcast does come out, which is live on Thursday mornings, which is right now at 11:30 Eastern Standard Time. All right, everyone, we'll talk to you all later.